right, guys, what is going on? What's good? I hope you guys are having a blessed day today. Let me know if you can hear me. You know, OBS always has their updates, and sometimes I can't tell what's what. So let me know, let me know. Lee Bright says, yeah. Clear and crystal. Nice. Nice. That's what we like. Appreciate that. Thank you for the sound check. Drop a like if you're here. Let me know that you're here. Let me know that you're with us, man. Let me know, because the markets are absolutely bussing today. I mean, good grief. Oh my. Look at that. Look at that. That's just crispy. That's just crispy. Like overcooked chicken. I mean, come on. Incredible. Just amazing. You know what I mean? What's good, Nikki, Planet, Nina, Sean, Naruto's at the church again today. So we got to watch our language, everybody. We got to watch our language, all right? We can't cuss in church, all right? What's good, Eli, Libright, Zay, Akinola. Hello, hello. Hello, hello. I always do this. I always lose the mouse. There we go. So, today's discussion. How to not get your face ripped off. I mean, personally, I really just wanted to use the thumbnail that I made. I made a bunch of them yesterday. I wanted to use it, so we're going to roll with that. So, I guess we could probably discuss a little bit of risk management if you want to. Although I do prefer price. I mean, price is everything to me, you know what I mean? But trading is more than just price action, you know? So we got to switch things up and really discuss things, you know? Someone I had a short conversation yesterday, and somebody was talking about their, I don't want to say struggles, because I think that's a very strong word, but you know, there's some resistance, right, to trading without emotions, or at least in terms of like trading without being irrational from emotions. Okay, like going break even too fast, risking too much, not having a stop loss, maybe buying challenges over and over and over again. You know, we've had conversations about this before, you know, and I think I've put out quite a bit of content on this topic. And that's really what the For Students playlist is, kind of more so like an introduction to trading and stuff like that, and some advanced stuff too. The personal development playlist, we really get in a little bit more in depth with trading psychology, discipline, and well, just personal development. That's why it's called a personal development playlist. Especially like the Cream de la Cream, part 1 and 2, and the Unlock Your Potential, a psychology discussion, something like that. Was good, Willow? You know, I put those out there for a reason, you know? And although I come on here and we do have fun, right? Like I tell you, you know, you want better psychology, take a better trade, right? My psychology right now is blessed because I'm short from up here. The market's screamed away from my entry, so I'm not all that worried. My stops, a little bit into profit, you know, I'm letting this bitch go. I mean, sorry, I'm letting the trade run. You know what I'm saying? I'm letting the trade run. Sorry, Naruto, you might have to wear headphones. if there's other people around. Can't be listening to somebody at church who's over here dropping F-bombs, right? I'm sorry. But I'm going to do my best, okay? But I'm going to let the trade run, right? Because what did we talk about yesterday? What did I talk about in last night's market review? Remember this imbalance from yesterday? Right at the start of the afternoon session? Remember we talked about that? Yeah. I remember, John. I remember. I would hope so. What's good, Vadu? I hope you remember. When we drop down into a 5-minute, okay, now this makes more sense, right? Remember these levels here. Matter of fact, let's redo that. Let's use the lines instead. That's the original one. Anyway, in any case, it would technically go to here, but we drew it originally from there, so we're gonna leave it. We're gonna leave it there. The model that I used, okay, this is a little hard to explain, but I'm gonna try and do my best. There were multiple models here in terms of entry technique, okay? Number one, you have this 15-minute imbalance from yesterday. Number two, you have a 5-minute imbalance within that. Now, I pointed that out on the Discord earlier today. I told you to start watching it. I think it was like right on this down candle here. I said, watch S&P from here. I thought we were going to run this low, like this one here. I thought we were going to run that. We didn't, so we came back, okay? But all this is a run on trailing stops. Anyone who was short from up here, lower, where's their stops at? That's the only high. Remember yesterday we talked about British pound? Was good, Edgar? Remember we talked about British pound, right? Yes, John, I remember. I write down everything. I write down everything you say, John. You don't have to do that, but... Or maybe it was Euro. No. Well, shit. I mean... It was both. It was Euro and British pound, right? Remember this? Remember this here? What did we discuss? Between this low and this high, there is only one low. There's only one. It's right there. Right? You guys remember that? Drop a 1. Drop a 1 in the chat if you remember that. Oh, look at that. We rhymed too. We rhymed, baby. There was only one low. Not 2, not 3, not, I don't know which low to use. There was only one. Just one. Okay. So you take that idea. Go back to the S&P. What's happening? The market makes a new low here. Same idea. From this high down to this low. There's only one high. Just one. Well, there's a short-term one here, but that's not all that obvious. The only obvious high is right there. Right there. That's it. That is the only obvious high besides maybe this one, but that looks really sloppy. This is disgusting. This is consolidation. That's gross. Okay. Singular high, right? Think about who shorted up here. Not me. I was still in bed. No shame, no shame, no shame. All right. I'm still in bed. All right. This at 9:10, we have cleared out all of this, especially this low here. We cleared all of that. So somebody is finally, shorts are finally in profit. So where do the stops go? The stops could have been up here or at this high or wherever. They're going to be all over the place, right? Then the stops go where? Market goes down, makes a new low, right? Oh, well, that's lower low and lower highs. That's the downtrend. All right. Then they jam their stops to this high, right? Bam. They got knocked. Right there. Right there. Boom. I put this out a long time ago. A long time ago. If you go to my Instagram, you don't have to do this because it's going to be very hard to find. But if you go to my Instagram years ago, okay, not last week, not last month, not last year, years ago, that means more than 1 year. Somebody asked me a question. Well, I posted it, but and even months before that, somebody asked me a question. I remember who it was. It was here in Houston. I went to a house event, and we had our fun and everything, and people came up to me, asked me questions, and all that, and that was like a normal thing. But I got a really good question one time, and he had asked me. He said, John, how do I know which smart money concept to use? He said, how do I know which smart money concept to use? I said, specifically, I don't remember what I said, but it was along the lines of, well, it's you look for the concept that does two things. It takes out traders and rebalances price at the same time. That we call smart money efficiency. Why is that? Two birds, one stone concept. Two birds, one stone. Oh, okay. Well, that's kind of cool, I guess, but what am I supposed to do with that? It's the concept that takes out traders and rebalances price at the same time. What is the Y slime model? Your stop loss is my entry. Oh man, John, that's egotistical, man. That's I don't like that. I don't like that. That's arrogant. Okay. Well, where other traders are getting out, I'm getting in. Not every time. I usually don't do this. I usually don't. But that's what the model is. The model is shorting above old highs or buying below old lows, period. It doesn't matter what you think about it. That's arrogant. The market doesn't care. The market does not care. Okay? Now we can have our fun and we can, be an a-hole later on. Okay? But shorting this, that's what everybody wants to do, right? Why doesn't everybody do it though? I'm short from here. I'm in an options contract right now. I'm up over 40% from here. I'm recording it too on my phone. Where's the market going to go? Honestly, I have no idea. But what I think is exactly what I pointed out yesterday. 43.66 and a quarter. You know, John, that sounds familiar. 44 or 43.66. That might have been in the market review last night. Oh, okay. Now it makes sense. Now everything adds up. We stalked this yesterday. We didn't get that yesterday, but we stalked it. Okay, well, what's happening today? We were unable to make a new high. S&P could not do it. It could not do it. Couldn't do it. What'd Nasdaq do? Oh. Well, that's interesting. I didn't see that. What's happening there? Well, when one of them does something the others don't, what'd the Dow do? Ooh. The Dow couldn't reach yesterday's high either. Couldn't do it. Nasdaq was the only one. The only one. What does that indicate? Manipulation. That's distribution. That literally is manipulation. It's in the book too. It's in the book. So, hey, if the bias is short, what is the Beverly? I don't know if she's here. She had posted on or commented on my Twitter. I said, if the market's going to go down, what's it going to do first? What's it going to do, chat? If the market's going to go down, what does it do first? What does it do first? If it's going to go down, we got news pretty soon too. Hopefully it rocks lower. If it goes higher, I'm toast. I mean, my stop is in profit, but I mean, if it's bad enough and I get slipped, I could still technically lose money on it, unless I get out beforehand. But I'm assuming the news is going to be the volatility to get us down there. But I could be wrong. But that is what I'm anticipating. So we'll see. And I agree, Edgar. It is crazy to see how consistent the markets are. And that's the thing. People get impressed when they see, I told you about Euro, that ran higher. We talked about potential shorts on S&P. The S&P is dumping today. And I'm not going to lie to you, that looks badass. That looks incredible for someone to come out here over and over again. That's where it's going. That's where it went. That's where it's going. That's where it went. Right? It looks impressive. But when you understand the market, it's not. It loses its impressiveness. It's like when you see Tom Brady throw a touchdown. It's like, all right, great. He's already one of the best players of all time anyway. You see him do it all the time. It's just repetition. Oh, another touchdown, another touchdown. It loses its, impressiveness over time. That's why trading should be boring. It should be. I mean, I ain't gonna lie to you, making money is fun. I mean, I don't care who you are. Making money is fun. But it's not that I am consistent. It's just the market. And when you wait for only high probability setups and you only call out or tweet high probability setups, you're going to be right more times than you are wrong. That's all that I do. Literally, that's it. I'm just waiting for a high probability setup. I'm waiting for manipulation. You know what I mean? Like, if you're brand new, it's going to be impressive. Like, oh shit. I mean, sorry. Naruto, I'm so bad. I can't help it. It looks awesome to short right here. You know what I'm saying? But it's difficult at first because at the time you think the market's going up. It's like, oh, we took a short-term low. Looks like a stop run to go higher. Well, that's what it looks like in the moment. Until later. Right? Because what was the 15-minute calling for yesterday? These lows. Right? These lows right here. We don't see that in SPY, unfortunately. We don't see that. But we do see that on the future side. Now, to me, in my opinion, we could still leave this open. Like, that doesn't have to be met. The Dow, these levels here, that doesn't have to be met today. That could be left open. I hope it doesn't do that. I really hope it doesn't, but it still could. Okay. But look at Dow, man. Look at it. These lows are clean. Not the same, but they're clean, right? Market's gravitating towards there. It's a little bit higher, dumps lower. A little bit higher, dumps lower. Just basic order flow. I mean, expansion to the downside, contraction to the upside, expansion to the downside. So, hey, I don't know how to explain it any other way. You know, we outline things in advance. The setups you've already been taught. The Y slime model is here, shorting above short-term highs. That's a model. This is also a mitigation. You have you have two because it hits this twice, but this is a mitigation and an imbalance overlap inside of a higher 15-minute imbalance. That's a mitigation model. Come on. Opening price is here. Okay. Shorting above the open in bearish conditions. I wonder when that video was put out. Years ago. Years ago. The concept is at or above the open. When's ideal shorts? Close to the open or above it. Okay. The logic is there. This high down to this low, is that imbalance in a premium? This high to this low, there's your 50%. That imbalance, my friends, is in fact in a premium. It's all there. Why sell, John? I'm done. I'm done. Everything that you've been taught all led to this. Oh, but yeah, sorry. I meant to follow up. Before it goes lower, it does go higher first. Shorting above short-term highs. Simple. That is the Y slime model. I should have put my hoodie on for that, but I didn't do that today. I totally forgot. You know, I'm not trying to look cool. I'm trying to fucking make money. Okay? I'm not trying to look cool. I'm trying to make money. All right? So we'll see how the rest of the day goes. Now, if this was any other day, if I was short futures, I probably would not hold it down to the 60s. Okay? I don't know if volatility would do something that ridiculous today. I don't think it would be that redonkulous. I don't see us doing this. Right? I don't see us doing that. I mean, that would be something though, wouldn't it? That would be pretty ridiculous. Well, we went lower first and that would be fine. But what do we do later? I don't know. What I'm saying is, if I was still short, because I did mess around with futures earlier, but I TP'd on the way lower and then broke out on the rest even, or broke even on the rest on the way out. So, you know, did that, and then I shorted here on the option side. So if I was in on the futures, I would definitely TP here before the news in 30 minutes. I probably wouldn't hold through it. On options contract, I would hold through here. Now, if you took more than one contract, then yeah, you could probably TP on one or two, hold one more, and leave it at that. You know what I'm saying? So it's a good day. It's a good day either way, man. In either case, what's today? Wednesday, right? What did we look at yesterday? I don't think I called out anything on Monday. Only euro, traded British pound. We looked at indices. Indices are busting today. So, I mean, hey, it's a good week so far. We probably could be done. If this were to dump down to the 60s, this would be enough to be done for the week and say, hey, screw Thursday, screw Friday, we're done. Laughing all the way to the bank, baby. Laughing on the way to the bank. Even Nasdaq gave the entry imbalance model and the next candle. Oh, yeah. Well, the next candle, I wouldn't consider a model like in that sense, but you could have had that up here too. That candle fills in or like trades into the imbalance, respects it, then that next candle could be the next candle entry. That could work too. which is essentially what I did on the option side. So yeah, man, mitigation model, Y slime model, next candle entry. Hello. I mean, how many different ways do you need to learn how to trade? Not financial advice, but I mean, dude, how many? How many concepts do you need? How many entry techniques do you need? How many targets do you need? You only need 1 or 2 good trades a week. And by good, I mean like knockouts. Like shorting here, exiting down here, like big trades. You only need 1, maybe 2 of those a week, in all seriousness. Was good, Stephanie? I have notes from when you were in the academy. You said consolidation, continuation, expansion. Yeah, something like that. Nikki, that would be a good, if you have that in a drawing, that would be good to post in the Discord. But this does not look like that. Well, in a general sense, it kind of does. You do have consolidation here. Goes higher first and then rips. So you do have that in a sense. But it just looks ugly. You know what I mean? We don't like ugly. We don't like it. We like beautiful. We like crispy and clean. We like sniper entries. We like no drawdown, bro. That's what we like. That's what we like. So, in any case, or in other words, on the option side, everybody keeps asking about options, okay? The thing is, I don't know enough about everything in options to like really teach you guys that. There's really only one sort of trade that I take. I take like if it's like today, I'm basically doing the 13th as an expiration. That's got to be Friday. Oh, Friday the 13th. Oh, in October too. Nice. I am not trading on Friday. That's good to know. Not that I'm superstitious, but I'm just saying. Friday the 13th in October, baby. We're getting spooky. All right. But anyway, if I'm taking a day trade, then yeah, it's either going to be the next day expiry or like at the end of the week. Okay. So options, in a way, the risk is basically predefined. When you purchase, like I purchased this option contract for $179. Oh, I thought I paid 180. I guess I paid 179. Oh, I got $1 less than what it was supposed, what I put the limit in for. That's fine. Right? Right now it's trading at 272. What my thing is, if they know that news is coming, it's hard for me to tell if I'm going to get the full volatility premium because of news. I can't tell if it's built into it already or if it's not. And it has something to do with the Greeks. It has something to do with delta or theta. I don't know. Okay. I do not know. All I know is I'm up 52%. Okay. I would like to be up a lot more than that. And hopefully if the news sends us lower, then hopefully that's what makes the exponential, like exponential profit is what I'm saying. We're going to find out soon enough. We're going to find out. Unless we tag this before 1 o'clock. Unless we tag that prior to. Because if we come down here and we grab that before 1 o'clock, I'm hopping out and I'm not going to hold through meeting minutes. Because meeting minutes, I don't know. I don't know what's going to happen. You know what I'm saying? As long as we keep going down, though, that is a good thing for this particular trade. And I'm still recording it on my phone, so you see it. Okay? But let me get back to what I was saying. An option contract, sometimes they can be kind of expensive. $200, $300 a contract. That's expensive to some people, okay? Because the thing is, that is the max you're willing to risk if the trade goes south, if you just hold it, if you don't trade with a stop, if you just say, screw it, whatever happens, happens, then the most you can lose is the amount you put in on that contract. Like, for example, I paid $179 for this contract, okay? So if the market flew higher, if I didn't use a stop, if I went on vacation and forgot about it, the most I can lose is $179 because that contract would expire worthless. Most contracts do, okay? Most contracts expire worthless. But the thing is, if I'm shorting at this particular price level, I could use this as a stop and go, okay, I might have paid $179 for this contract, but maybe this high it goes down to $140. That can be my stop, and I can sell it for $140. So granted, that would be about a $40 loss. But would you rather take a $40 loss or a $180 loss? You know what I'm saying? So it depends on what you want to do. You know, if you're comfortable with 179, or maybe you're not. Maybe you only want to risk $50. You can still purchase it for 179. But then you'll have to put a stop loss in that would sell it if the market got to 130, $1.30, or something like that, to where you would lose $50 and then be stopped out. Okay, so I know it sounds a little bit complicated, but you know, let me put it to you this way. With this contract here, I took $6 of drawdown. Okay, that means the trade went against me by $6. Right now, per contract, it's up $97. Okay. Not financial advice, not enticement or anything like that, but I took $6 of drawdown per contract. It's up $99 a contract. So, you know, why do we trade options, or why do I trade options? Because it's minimal risk with potentially exponential gain. Okay. Small risk, large reward. And if you can't take $6 in drawdown, probably shouldn't be trading. Okay. Or even say $60. Would you take $60 of drawdown for 1,000 gain? Shit. Doesn't take a math genius to go, yeah, I would, John. But not every trade is going to be like this. Not every trade is going to be a sniper entry, okay? I try to make that a point with you guys. I try to tell you, like, look, yeah, sometimes these trades are going to be nasty. Sometimes they're going to be absolutely absurd. And it's going to slap anyone in the face who says you cannot know where the market's going to go. It's laughable. It's absolutely laughable. The markets are random. Really? Then why did I short right at the high then? Really? You know what I'm saying? The markets are predictable. We do not react, we predict. We do not react, we predict. It's in the recordings, bro. It's in the market review, and it's in yesterday's live session. You knew these levels here. You knew them yesterday. 48 people, 18 likes. Come on, man. What's up with that? If you guys have been here for a little bit and you're learning something, let me know. Drop a like on it. Invite your friends to get on here. Tell your mom. Be like, Mom, we gotta get into some options contracts. Nikki says the Dow just grabbed the lows. Did it? Or are you looking at DJI? Or are you looking at US 30? And the only problem when I record on my phone is all the notifications. You see Instagram pop up like a dozen times. I always forget to take that off. US 30? Yeah, see, that's what I thought. That's what I thought. US 30. I don't even know which one to use. But it ain't that one. Sounds like your broker's manipulating. That's what that sounds like. Because none of these US 30s have taken these lows over here. So I'm not sure what's going on that side, but it sounds like your broker is ripping faces off. Lee Bright screaming, do not use Oanda. Man has a vendetta against Oanda. What are you not telling us, Lee Bright? What? Well, what do you have against Oanda, my friend? Oh, you said Nasdaq. These shorter term lows, yeah. This was London. This was London's low here. Right there. That is London's low. I think the low equivalent of what we're talking about for Dow and the S&P would be down here. Which I'm not sure. I'm not entirely sure. Deep ass retracement though. Imbalance right there. Mitigation here too. But Nasdaq went higher, so I would have probably not wanted to short that one. That's why I liked S&P, because it was weak. Look how weak that is, man. Look how weak that is, man. You know? Weak sauce. Weak sauce. Oh, your toddler wants to play Super Mario? Go ahead. Play shit. I want to play Super Mario. Dude, when I hang out with my friends, I smoke them every time. Every time in Mario Kart. Every time. Let me tell you something. You know what's funny? I started trolling them too. In a nice way. I would use the clown car. And so their son is like 6 years old, and I'm like, I said, bro, you're gonna get beat by a clown car? You're letting a clown beat you? Let me look this up real quick. You gotta see it. You gotta see it. I literally, oh my God. This is it. This is it. See that? Literally, it's a clown car. And I'll come through first place with this. I'm like, how you gonna let a clown car beat you, fam? How? He just looks ridiculous, right? But yeah, sure enough. That's what I play with. So, some insight for you. Some insight. No, y'all think it's funny. I really do. Anyways, 15 minutes until we get something to throw down here. So, you guys have any questions before meeting minutes? And I guess I'll give you a couple of risk management tips before we hop off. the stream today. What's the high on that? 6? Oh my God. Excuse me. A question about the S&P daily. Could we possibly be considering an exhaustion? I don't know what that is. Of the retracement for price to go lower plus price reach for a daily imbalance. So I'm not exactly sure what exhaustion means, my friend. I know I get exhausted when I walk up like 10 flights of stairs. I've done that before. I did that in Dallas. There was some event years ago and they were like, we got to go here. And then we went there and they were like, oh, it's on the 8th floor. I'm like, dude, are you going to carry me up here? Because 8 floors, bro. 8 floors, no elevator? Are you serious? It's ridiculous. I got up, I was wheezing up there. I was like SpongeBob without water when I got to the 8th floor. Crazy. I was exhausted then. But as far as price action goes, I don't know what that means. Like, in all seriousness, I don't understand. To me, the markets either go to an imbalance or go to liquidity. They're either being accumulated or distributed. You know, it's either running liquidity or accumulating to go run liquidity at a later time. I mean, you know what I'm saying? Like, it's going to do something to that effect. So, you know, when it comes to overbought, oversold, I don't look at that. That's why you don't see RSIs or MACDs or moving averages and stuff like that. I just don't look at that, you know, type of thing. So when I'm interpreting your question, I don't understand what that means. The daily time frame. Well, I want to stay on a 15 minutes so we can watch everyone who's long get just obliterated. But yeah, I don't know. I think, well, we pointed this out on SPY yesterday. The imbalance here on SPY. Okay, it's there. So how's that for top down? Daily imbalance. Couldn't run yesterday's high. 15-minute imbalance. 5-minute imbalance. Down to equal lows. A nice little matryoshka. You know what that is. But as far as like what we do today, I mean, that's what price is reacting from. You know, so in a general sense, I would like to be bullish, but I'm not going to be bullish when there's equal lows. That clean? Probably not. Again, there is a chance, there is a probability that we do leave that open and launch. That could happen. But I think the probabilities are more so lower. Look where we're at currently. Look at this range from this low. Well, my face is probably right there. Look at this low here up to this high. This is a premium within a premium within a larger premium. That's like 3 or 4 premiums right there. There's got to be stops here because the lows, I mean, there's an imbalance right here too, like in the 50s. It doesn't just have to stop at the equal lows. It could continue lower to the 50s or even the 40s. You know? But that's what we are currently reacting from here, specifically on the daily time frame. But yeah, where we go the next couple weeks, I don't know. I have a few stocks, but the stops are in profit, so time will tell. And we won't know until price pans out. Until she pans out. Oh, okay. The reaction from the imbalance. I got you. That's what this gray box is up here. I don't know if I posted that in the Discord or on Twitter. I don't think I did. But in any sense, even if you didn't see that, even if you didn't see the daily imbalance there, hopefully you saw that Nasdaq ran previous day's low, or excuse me, previous day's high, and the S&P could not do it. And like that was probably the main thing. Weakness, retracement, done. Okay. Any more questions? How do you interpret NQ knowing it didn't hit that daily level? Well, I mean, you just look at the chart, my friend. Well, I have another chart to look at, but in any case, you just look at it. You go, okay, there's Tuesday's high. There's our current high. And then you look at Nasdaq and you go, okay, well, there's Tuesday's high. There's today's high. That's higher. So you go, oh, Nasdaq sweat previous day. S&P didn't. Very simple. You just got to remember to look at it. I mean, if you want to, that's what I look at, but it's up to you. Edgar, I think that's BS. I think it's BS. Oh, that Nasdaq didn't hit the daily imbalance. Well, I mean, the indices are going to move generally together, but they're not going to be in step. They're not going to be bar for bar. So it doesn't have to. It doesn't have to do the same thing on the daily. Okay, there's going to be strength and weakness. There's going to money shifts. Okay, and Nasdaq is heavily tech sector. The S&P has a lot of tech stocks in it, but the measurements are different. And the Dow Jones is the 30 largest companies, so they move differently. They move similar. They're like brother and sister, if you will, but they're part of the same family, but they're each their own person. See what I'm saying? So they're not going to move in sync like that, like day for day, bar for bar on the daily or weekly time frame. They're just not going to do that. So the fact that Nasdaq didn't hit a certain level on the daily, but the S&P did, the Nasdaq not doing what the S&P did doesn't really have that much of a significance, in my opinion. Whereas understanding what I've shown you about Nasdaq running a previous day high, but S&P not doing it, that to me means more. Okay. There's a lot of smart money content on YouTube. Well, Edgar, not every content is accurate. And even if it was, not everybody is going to enter the same and move the same. And even if we did, that still would not move the markets. Retail traders don't move markets, especially if it's moved by an algorithm. It's not going to matter. So I understand the question, but it's just not something that I would be worried about. I would try to find better questions. Okay. Not to sound like an a-hole, but I would just find better questions to ask. It's not going to change. Oh, Naruto, great question. I did not get Starbucks yesterday. I didn't get it. I posted that in the Discord. Because I could tell you guys didn't want me to get it. When we voted yesterday, I could tell you guys didn't want me to get it, so I didn't. Even though we kind of, you know, election interference with me telling you to vote a certain way, those overnight votes, you know. But the general consensus was you didn't want me to get Starbucks, so I didn't get it. I left it alone. So hopefully you can appreciate that. Campaigning for Starbucks. Yeah, they should cut me a check. I was trying to get sponsored by either Bang Energy or Rain. And I know a guy who knows the CEO of Bang Energy, but they lost that lawsuit to Monster for like $200 million. They got clapped. GG. Now, Rain is actually, I believe, is owned by Monster. But if you look at Rain and their social media, they have like super fit guys or super fit girls, and they don't really sponsor traders. You know what I'm saying? They don't sponsor traders. They sponsor like gym rats. So I'm like, okay, I guess it's not going to happen. But I was hoping. You know, the worst they could say is no. But I think it would be great. Flavor of the day. That'd be cool. You know, but they don't like traders, I guess. You know, you got to spend like 60 hours a week at the gym to get sponsored by these energy drink companies. I mean, I work out a little bit, but bro, come on. I'm not doing that. Okay. So we move on. And no sponsorship from Rain or from Bang Energy. And I shed a small tear, and then we just move on. And that's that. Some clean lows on triple Qs. Ugh. Ugh. All right, I guess we'll just keep it on a 15-minute. And then we'll see what happens. Eli, we'll look at Uber stock in a minute. I just want to see if the indices finesse lower, or if they go higher first and I break even. I mean, that's a possibility too. It's called Rain with a G. It's like REIGN or RAIGN, something like that. Rain Energy. Like their rainbow sherbet is spelt with rain in it, like that. So Texas pecan coffee. Ugh. Blech. I think I'm gonna pass on that. You know, if they ever make an energy drink that has 400 milligrams, I'd rock with that. I would definitely rock with that. I would probably do it outside of an emergency room just in case. You know what I'm saying? Willow's about to dab. Hey, let's do it. I'm not gonna smoke today. All right, so let's see. Let us see what takes place. And that's if we get volatility. whatever. What else? Because we had PPI at 7:30, meeting minutes right now. And then tomorrow is CPI. And unemployment claims. And then Friday is just British pound and I guess consumer sentiment at 9. Whatever. Get it in while I can. Hey, I don't blame you. I don't blame you, man. You got to do what you got to do. Does anyone have a link to the meeting minutes? Dude, I can never like find it to watch it. Does anybody have the link to the press release? It says one more hike is likely. Got the TV on. Is it on the Fed's website? It probably is, but I can't. It has a recording of probably the previous. I mean, that's a FOMC press conference, but that was September. So I can never see like the live one. I can never find it. Like I've never once found it to watch it. Drop the link, Willow, or whoever has the link. Because I'm assuming we will probably get volatility at some point. You don't got it? You're fired. You're fired, bro. But anyway, I guess I'll give you some risk management tips here in a minute. Or I guess we can do that now since we'll have to wait and see what takes place. And unfortunately, I didn't write any of this down. So if you are, there we go. If you are struggling with emotions, okay, the first thing I would say to probably do, honestly, is to stop trading, especially if it's live, okay? Because you don't want to make a bad day worse, and you don't just want to keep losing money over and over and over again and you don't want to keep digging yourself into a hole, okay? So what you essentially want to do is stop the bleeding, all right? So if you find yourself trying to over leverage, get your money back, you know, and you just have these, like if you just despise trading, but you trade anyway, you know, and I think we all kind of understand what that means if you've been trading for a while. where you want to trade, but then you hate trading because you're like, I keep losing money, or I keep blowing my accounts or something. Like, what I would do is just stop trading, bro. Keep your money, keep it in the bank or in cash or whatever, and stop depositing money into your trading account, okay? And just stop the bleeding. Take a week off, take a couple weeks off, and, you know, refresh, okay? Refresh. It was Seneca who said that the mind should be given time off to refresh, but not so much that it goes to mush or something like that. Something along those lines, right? You know, we can work all the time and take care of kids if we have kids, or, you know, we got a job and all these things, a lot of responsibilities. And then you want to incorporate trading on top of that. It's a lot, not just physically, but mentally. It could be a lot mentally. I understand. Okay. So if you have too much on your plate, what you got to do is take some off your plate. Some of the best trades that I find are on days where I really planned on not trading, or I went into it with an open mind, you know, like, oh, I don't have to take a trade today, and I just interpret the market for what it is. And if we see something, we see something. If we don't, then we don't. And that's usually when I find some absolute banger setups, you know, because your mind is clear and you can see the market for what it is. You're not worried about, you know, whatever, other people or your previous blown accounts, or, you know, whatever, Twitter nonsense, you know? So the first thing I would say is probably to just stop trading altogether, man, and just relax. Take some time off. What I would also do is figure out what is causing those emotions. Like, what's causing you to derail? Like, why are you on tilt? You know, because there could be any number of reasons why you're on tilt. Robert Greene talks a lot about childhood, believe it or not. So, kind of like Freud, right? Everything goes back to your childhood. I don't know if that's the case, but there's something that is bothering you internally. I don't know what that is. You have to figure that out. I don't know. And then whenever you do figure it out, you need to fix that. If you're continuously bad with money, you need to figure out why you're bad with money. And then write out a plan to change. And be like, you know what? I don't want to be bad with money anymore. I want to be good with money. I want to make money. Right? There's an infinite number of reasons why you're on tilt. From relationships to family to death to anything. Social media. I mean, I don't know. But each of you are individuals. You're each your own person with your own unique life and journey. So I don't know what's causing you to go on tilt. Maybe you don't know enough about the market. Maybe you don't have enough experience. Maybe you're just emotionally driven by something. I do not know what that is. But the worst thing you can do is to just keep throwing money away. Don't throw money away, bro. Don't do that. So the first thing, again, if I haven't overstated my point already, is stop trading. Switch to demo. If it's your strategy, work on your strategy. If it's your technique or your entry technique, work on it. If it's you, where you're kind of like me and you struggle with holding trades for a long time, we'll work on it. Figure it out. Maybe you got to up the time frame. Maybe you got to up your expectations. Or maybe you just need more experience. Or maybe it's a combination of all those things. Having times like that right now with a heavily foggy mind when I'm in front of the charts, right? How hard is it to focus when you got all this shit going on? All this, sorry, Naruto, I don't know if you're still here. All these things going on, you know, it's hard to focus, man. Marcus Aurelius said, concentrate every minute like a Roman on what's right in front of you. So on and so forth. He knew the importance too. Man, we're about to go to war and I got to make all these decisions And I can't be worried about why I'm hungry right now. I need to concentrate. I need to focus like a Roman because people are going to die and it's going to be on my hands. I need to figure this out. Concentrate. Now, the good thing about you and I is that trading doesn't have to be life or death. We are not sending someone to war. We're not sending someone to their death, right? It's just the markets. But either way, you got to concentrate. You got to be fully present. It's why I tell you to read these books, man. That's one of the first questions. Not that I like answering a question with a question, but when people ask me about certain things, I ask them, have you been reading the books I've been talking about? I've been recommending books for a very long time, for years. And you know what happens? You know what 9 times out of 10 people respond with? When they come to me and I ask them, have you been reading? You know what they tell me? What do you think they tell me, chat? What do you think they tell me? Nikki agrees with taking a break, working on the unhealed traumas and addictions. What do you think they tell me? John, I have this problem. Okay. I'll help you. Have you been reading the books I've been telling you to read or recommending to read? And 9 times out of 10, because sometimes I do get a yes, but 9 times out of 10, it's no, they haven't. No, John, I haven't been reading. I haven't read any of the recommendations. I don't have time to read. I haven't gotten the books, or, well, I have them, but I haven't read them yet. They're just sitting on the shelf, collecting dust. Okay, well, what is that going to do for you, bro? What is that going to do for you to have a book and not read it? I have a couple like that. But a couple like that, not all of them. I bought 4 books the other day. I already finished one of them in like 2 or 3 days. I mean, dude. I had no time to read it. Right. I had no time. Okay, well, did I get somehow granted with 30 hours a day? Where you only have 24 and I have 30? I have an extra 6 hours a day? No. I know some people may not agree that, yeah, John, we all have 24 hours in a day, but, you know, some of us have different schedules and different, you know, responsibilities and all. It sounds like an excuse is what that sounds like. It sounds like, well, John, I got to do this and that. Okay, well, you chose to do that, didn't you? You chose to work 40, 50 hours a week. You chose to go to yoga class or whatever. Whatever it is you got going on, you chose that. I think it was Brian Tracy or one of the older guys who basically said, or no, it might have been Kenneth Blanchard, I think. I don't know. I got so many quotes in my head, I can't even understand. You either make excuses or results. You can't have both. You either produce excuses or results. You can't have both. You can tell me your excuse all you want. I will listen to you. I'll read your message. I got this or I got that or whatever. Okay. What do you want me to do about that? What do you want me to do about that? I can't do anything for you. You either do the work, you either print the charts and do the journaling and read the books, or you don't. Okay? And I'm not trying to sound like an a-hole or come off like an a-hole, but I'm just trying to be honest with you, bro. I tell you to read these books for a reason. I tell you to grab the Daily Stoic and stuff like that for a reason, because I'm not saying that these books have all the answers, because they don't. You'll find a lot of answers there. Or like Willow said, you know, Bible's ultimate wisdom, you'll find a lot of answers there. You got to read. You got to do the work, man. It's almost like you're asking me for a shortcut, and I cannot give that to you. I do believe that as a mentor who can teach you a few things about price action and risk management and a little bit of trading psychology and stuff, I can teach you certain things like that. And I can decrease the time it takes to learn to a degree, but I cannot shorten it all the way. Where you can just, you know, you ever seen those reels or those posts where somebody hacks or finds a glitch in one of the Mario games where they take a really like a big ass shortcut and then they finish the race in like 30 seconds, right? Like I feel like sometimes people are asking for that and I cannot give you that. I can give you a little boost. I can cut the time it takes a little bit, but not by all that much. You got to put in the work, man. And there's no getting around that. So you got to figure out what it is. Refresh your mind. Figure out what the problem is and fix it. And you'll figure it out if you try hard enough. People have done it. It's 66 degrees outside. I'm gonna have to go outside. I haven't been outside all day. Reading is like feeding your mind with new codes to perceive reality and yourself as something new. Yeah, I agree. I mean, you get to learn from people who lived before you. You know, you're not the first person to face these issues. You're not the first person to blow an account. You're not the first person to trade with emotions. You're not the first person to look at a trade and go, oh man, I'm short and it's kind of going against me and I'm scared. You're not the first person to go through that. Oh, your marriage is falling apart. You're not the first person that has a marriage that fell apart. You're not the first. And people have gone before you and they've gone through it and they got on the other side. Or maybe some people didn't get on the other side, but some people did. And they write about these things. These traders who come on here, not just me, but there are other traders too who come on here and they give you their time and their effort and their knowledge and book recommendations and give you things. And it's up to you to take it or leave it. The last thing, like the fifth last thing, you know, risk management is key, man. Risk management is key. You always want to risk what you're comfortable with losing. Stop trying to get all the money you lost back. Charge it to the game, bro. You lost it. That's the price you pay. That's the tax you pay on success. I've screwed up a couple of accounts as well. Now, granted, this was 2014, 2015. It's been a while, but I've been there. I had to learn that. I had to wreck that account to go, man, you know what? This kind of sucks. And I do not like this feeling. I've lost all my money. I need to lower my risk, take better trades, hold on to winners longer, right? And if you make the same mistakes over and over and over again, you need to figure out why you're doing that. There's probably some self-sabotage in there somewhere. So stop trading. Stop throwing all your money away. When you get back into it, reduce your risk. Stop over leveraging. The money that's gone, leave it. Leave it. Don't even worry about it. You know how you find success? You know how you find good trades? You don't worry about previous trades, bro. Mark Douglas put this in a very beautiful way. He said, each moment in the market is unique. Each one. It's all unique. The break even that I took in here on the future side, well, I mean, I took partials and then broke even on the rest. The option contract has nothing to do with that. It's completely separate, completely different trade. It's different. You can't be hung up on previous losses or previous blown accounts or whatever. You cannot trade for those reasons. You can't justify getting into a trade to try and get a loss back. You got to focus on the process, okay? To get the outcome that you want. Zay, I have a few different accounts. Forex account, stocks and options account, futures account, the metals. I mean, I wouldn't really count that as an account, but you know, like physical metals. I do have a self-directed IRA, but that's like nothing. That's like nothing. So yeah, I have multiple accounts though. So anyway, with that being said, hopefully that helps you. I'm not going to spend all day on here. If we get volatility, we do. If we come back all the way up here, then I guess I'll break even, and then that'll be that. So that's what I'm gonna leave you guys with, and hopefully that's giving you some things to work with today. All right, be blessed. Have an amazing rest of your day. Thursday, tomorrow, I will put out the next market review, and then I'll see you again on Friday, the 13th. We'll stream. I probably won't trade that day, but we'll have a short stream. And then remember, Sunday night, the 15th, Sunday night is the last night to upgrade. Okay? If you're already, if you're a tier 1 or 2, Sunday night is your last night to upgrade to tier 3. All right? So be good, man. And I will see y'all here on